So I'm particularly excited to be recording this particular video. Now, the title of this video is my monthly PnL statement for the month of January 2025, how I performed, my total number of trades taken, trades won versus trades lost versus total impact on my account balance and bottom line. But also, it's my journal review session, lessons learned, and plans to improve performance in the weeks and the months that come. So, what happened was, I'm recording this on Sunday, February 2. So, yesterday, Saturday, February 1, what I did was I went over every single trade. Now, this is my, so you can see summary here. This is my account, it's a 25K challenge account. My equity is $23,173. So I am down about a little over 7% on the account. But that's not really what's important because I was down almost 9% at some point. Then I came up to being down just 4%. Then I lost three trades in a row, risking 1%. So, but this past 5 weeks, I took about 16 positions. If you take a look at this, so the first trade here should be the last trade I took here. So this starting with this green trade, this win on Euro USD, that's sell, because that was part of the first week of January. So all in all, there are about 16 trades here, 16 positions, 16 trade ideas. You can see that I only won 1, 2, 3. This one doesn't really count. So about 16 trades. And at the end of the month, I am down now. Last 30 days, this should be last 31 days because it's not complete. So I'm actually down about a little over $500. So I lost 2% on the account in January. I lost 2%. I lost $500. All these trades that you're seeing, the losses plus the wins equal to a 2% loss. Now, what I did was I analyzed every single one of these trades. Now, that brings me now, it's a 2% loss, but it comes to a minus 4R on the month because I was splitting my trades into 0.5%. So minus 4R, that is a cumulative net of 4 losses, 4 losing trades if you're risking 0.5%, for a total percentage loss of 2%. Now, what I did was every single one of these trades that you see here, I analyzed every single one of them to look at the ones that were valid trade setups that I needed to take, to look at the ones that were valid losses that I could not have avoided, to look at the ones that were losses that I took needlessly. Was any of these trades in breach of my rules? And were any of these setups, the losing ones, similar in a way that I can identify a pattern from and improve on going forward? And my findings were very interesting. And this is probably the most important video on my channel. It is extremely important. This is not about backtesting. This is not about risk management. All those things are important. But the thing that has the greatest potential to propel a trader forward, in my experience, as I am constantly learning, is reviewing what you have done in the market. If you cannot see everything that you did in the market over a defined period, it's incredibly difficult to do anything differently going forward that would improve your performance. And it's extremely likely that you repeat the things that you did that cost you dearly in the market. And if you want to improve, what you want to do is minimize the number of losses that you're taking. Look at, so in this month, I had a 10, almost 11 trade losing streak. In this month of January, I won only 3 trades, but in this month of January, the three trades that I won made me about 4% profit, and then I gave back some of those profits. You see, from these last 3 trades, I gave back, some of those profits, bringing me down to where I ended for the month. But you can see that in the entire month, as bad as this month was, I only lost 2% of my accounts. Now, that's not necessarily a good thing, but it goes to show that if I could only have eliminated some of the unnecessary losses that I took, some of the unnecessary trading habits, that I got into, and if I could have taken some of the trades that I missed that would have been profitable, where would I have been at the end of the month? So I did that exercise and I want to pull up my findings here. This document contains all my stats, all my metrics for the month of January, and it's very interesting. In January, I had 15 trades, 15 trade ideas. As you can see, I had 3 wins, 12 losses. Now, out of those 12 losses, I looked at how many of them fit my plan, fit my trading, my entry criteria that I would have taken. Even in hindsight, I could not see any reason not to have taken this trade. And out of those 12 losses, 8 of them turned out to be avoidable, meaning that I took 8 of them in breach of some better judgment of mine. And we will take a look at what those things are when we come to pitfalls over here. So it means that in the month of January, there were only 4 losses that were absolutely unavoidable. That is, there were only 4 losses that even if I improve my trading, even if I improve my performance, if those 4 setups present themselves in February again, I am 100% guaranteed to still take those losses. But there were 8 losses where if I can tweak something, these 8 losses will no longer be losses in February. Think about that. That's incredibly powerful. And I'll tell you why I was able to single out these 8 losses. Missed opportunities were 4. Missed opportunities are opportunities that I did not take, either because, first, so for example, I just mentioned in my review video that there were about 2 opportunities where the setup printed when I was in a meeting, an impromptu meeting that I could not open, my setup and start trading in that meeting. That's a missed opportunity. Hopefully, I don't have so many of those in the coming month. But out of those 4, 2 missed opportunities were opportunities that I missed, either because I was not looking at the chart or and no meeting, nothing. One of them was on a Friday evening when I had just taken a loss the previous day. And so I zoned out of the market. I told myself, I'm done trading. But why would I say that? If I had remained alert and kept looking at the chart, I would have seen that my setup printed beautifully and I was nowhere to be found to take that trade. So these are some of the things that you want to work on to improve performance. 2 out of those missed opportunities were trades I did not take because I saw the trade play out. Like I actually saw the setup. I was in front of my, setup. I was in front of my desk. I saw the setup, but I declined to take the trade because I was fearful for different reasons. Now, the reason that you take or do not take a trade is extremely important, such that if a setup prints and there is no good reason not to take it, if the reason that you are not taking it is just fear or complacency or you are not sure, any of these subjective reasons that negatively impact you. And then if that setup ends up being a winner, you're like, why the hell did I not take this trade? Those are setups you want to make sure that you don't miss in the following month. So monthly PnL was -4. I've talked about that. Now what I did was I looked at each week that I lost. So in the first week, for example, in the first week, I actually made only 1R. In the second week, I made -4R. In the third week, I made -2R. In the fourth week, I made +2R. And in the fifth week, I made -1R. Those are my actual stats. That gives you the cumulative -4R. But when I looked at all the trades that I took, plus all the trades that I missed, I realized this is what could have been. In week 1, there was a trade I took that I did not need to take. That would have put me at 2R on the week. In week 2, I missed 2 trading opportunities out of fear and I took a loss. Then I did not take the trade that should have been a win. That would have put me at 3R for week 2. For week 3, I missed 3 perfect trading opportunities and instead took 2 losses. So a setup printed, and I still remember as I'm talking, I can visualize every single one of these trades, every single one of these trading opportunities. I know exactly what they were. But for example, this week 3, there were 2 trades on New Zealand. There were 3 trades all on New Zealand dollar. The first one was a short, the second one was a long, and the third one was a long, all in the same week. Now, the first short I did not take because I was fearful, because I was coming off the back of a six trade losing streak, and I wanted the setup to be absolutely perfect. And so I rationalized and talked myself out of taking that setup. That would have been a 3 hour win. The second trade I lost because I went into early ahead of news. If I had just waited, the actual setup that printed after the news had been released would have netted me 3R. But on that trade, I took two losses. And then at the end of that week, this same week three, on Friday, a setup printed, and because I was so bummed out from my loss, I was sleeping, and I missed that trading opportunity. Now, don't get me wrong, resting, sleeping is not bad, but I could easily have. The reason that I was not at my station is what was not good. It was because I was feeling down. Losing a trade should not impact my performance to the point where when I'm supposed to be at my trading desk, looking at setups, printing, I'm not there. So week three could have been a 9 hour week. Week four was actually my only positive week in January. And in January, I made 2R. Now, in week four, I could have made 4R instead. Now, remember week four very well. The first trade was on a Monday, 20th January. Donald Trump was speaking. It was his inauguration. It was a Monday evening trade during Donald Trump's inauguration. I was speaking. That is about as low probability gets. You don't need to be trading at a time like that. I took a trade and I took a loss. You see, avoidable. That week four, in between, I took two winning trades. One was a 3R, one was a 2R. So that put me at 5R. Then on Friday, I was overconfident. I took two trades and both of them were losses. The first loss that I took, I did not need to take that loss because I rushed in. I was eager. Again, news was coming out, the manufacturing PMI. So look, you can go and look at the economic calendar, January 2025. You see all these things I'm talking about. This is why it's important to journal. You can remember vividly the mistakes that you made. It was Friday morning. The litany of PMIs were coming out. French flash manufacturing PMI, German flash manufacturing PMI, UK, Great Britain flash manufacturing PMI, dollar manufacturing PMI was also coming out in the evening. It was London session shortly before the news releases, and I rushed into the market because I did not want the markets to go without me. What happened? I got taken out when the PMIs got released. And then, after the PMIs got released, the setup that I was anticipating actually printed. Now, I took that setup. It ultimately ended up being a loss. But that second loss was the only loss I needed to take. My rules are simple. I should have just waited for the news release to come out first before going in. So I ended up making only 2R on what could have been a 4R week. And then finally, week five, I took one loss. That was a valid loss. Nothing I could have done about that. But remember, I told you I missed a trading opportunity. Um, okay, in my previous video. So week five, I missed a trading opportunity because I was in a meeting when it set up. Nothing I could have really done, but assuming I was at my desk and I was able to take that trade, the 1 hour loss plus, and all of these trades, when I tell you the wins, each win is 3R. Each win is 3R because I take a 1:3. So that's why week three is 9R because there were three consecutive wins that I did not capitalize on. So I would have taken that loss and I would have taken the win and would have put me up as 2R for the week. Now, isn't this beautiful to see that? Of course, this is not to say that the next month will automatically be perfect, but the objective is to reduce the instances of self-sabotage, to reduce the instances of missed opportunities, to reduce the instances of poor performance that negatively impact your bottom line. What could have been tells you the ideal perfect world in which you took every single trading setup that printed according to your rules and that there was no reason for you not to take any of those trades and you avoided taking setups that you didn't need to take. January could have been a 20-hour month. When you add 2R plus 3R plus 9R plus 4R plus 2R, it brings it to about 20R. 20R is what my setup, and these are setups that I saw that I could have traded. 20R is what I could have had in January. It is saddening on the one hand, But more importantly than that, it is incredibly encouraging because it tells you, one, that you do have a profitable system that is still working. You're able to identify pitfalls so that going into the next month, you can avoid them. Now, even if I did not make this entire 20R, if the only thing, let's forget the missed opportunities. If the only thing I did was eliminate those 8 avoidable losses, I would still have had a profitable month. Now, what are some of these pitfalls? These are pitfalls I have identified, and this is where the journaling process gets individual, subjective, and personal to each trader. My stats, my pitfalls are not likely to be the same pitfalls of the next person, right? They are personal to me. So noting them gives me the opportunity to work on them. One of my pitfalls that I have somewhat effectively dealt with was revenge trading. In January, I only took one revenge trade and I closed it immediately. So I know that my journaling has been working. Now you will see here, what are my pitfalls? Trading shortly before news. This cost me 2 trading opportunities. This cost me two losses. You see, I put it there. Trump was speaking on a Monday evening. Did not need to take that trade. Then the second one, trading before news, was when I traded before the PMI. So that was 2 losses that just avoiding trading before news would have saved me from. Aggressively pyramiding into entries. This was the one that cost me to revenge trade. I did a lot of that in December and it did not work. But I only took one such trade in January and it cost me. So that was a loss I could have avoided. I ended up taking a loss on a trade that would have been a 1 hour profitable trade. Fear of losing, overthinking, and second guessing trade setups. I was on the back of a losing trade, and so because of that, I saw 2 trade setups. Two. It happened twice on New Zealand dollar, the exact same asset. I can still remember both setups. Fear of losing, overthinking, and second guessing trade setups. I had just taken a loss, and so a setup, beautiful setup printed, and I talked myself out of taking it. That cost me 2 trades. Lack of attentiveness to new opportunities because of time of day or of the week. Friday New York session, that trade anyway. So I'm noting exactly the trade that this pitfall cost me, whether it was a missed opportunity or whether it was an unnecessary loss. Impatience in waiting for full candle closure. This happened on one of the NZD long trades where I took a trade, instead of waiting for the full 15-minute candle to close, I jumped in. That worsened my risk to reward because the candle closed at a point where if I had taken the trade when the candle closed, I would have hit my 3-hour target and I would have been out of the trade. But because I did not wait for the candle to close, my 3-hour target now became much further and price never got there. Ended up reversing on me for a loss. So that should have been a win. If I had just waited for the full candle to close, I would have made money, but I ended up losing money. And then adjustment to entry requirements. Now, this is a change to my model. There were 2 trades that I identified where price traded into a fair value gap, but the liquidity sweep was not obvious. I noted that this happens usually on the 4-hour time frame. Daily fair value gaps, no problem. And if you don't know my strategy, I trade 4-hour, daily, weekly, and monthly fair value gaps from the 4-hour and higher. Now, of course, the lowest in that hierarchy is the 4-hour fair value gap, and I've realized it needs a little bit more context for me to take the entry. So this is an adjustment that I'm making to my technicals. It is the only technical adjustments I need to take, and it only made me take 2 losses, right? So out of the 8, this technical adjustment only accounted for 2. And then finally, trading assets outside my normal watch list. I took one short trade on gold. This entry was perfect. Everything, liquidity sweep, higher time frame, fair value gap, beautiful 15-minute bearish engulfing candle. The trade ended up being a loss. Now, that's not to say my strategy does not work on gold. It probably does, but there are probably more nuances to gold because of just the nature of the pair. Gold isn't an asset I trade. I trade the forex majors. GBP USD, Euro USD, NZD USD, those 3 for now. Gold isn't part of it. But because I was looking for trading opportunities, I wanted to, just get out of drawdown. I went and gave myself another loss on gold that is hurting me because I know that gold is not an asset that I'm supposed to be trading anyway. And so these were all of the pitfalls that I was able to identify just from reviewing every single trade I took in January. So imagine if in February, I don't take any trade before news. I don't take any trade on low probability days. I don't aggressively pyramid into any entries. I don't overthink valid setups and talk myself out of them because of fear. I am attentive to new opportunities and I'm dynamic in the market. I'm patient in waiting for candles to close. I implement this, technical adjustments that I have identified. And then I stick to my assets. Imagine how many unnecessary losses I'll be able to avoid. Now, this is not to say that I cannot still have a negative month or I cannot still lose trades. Of course, the likelihood is very, very, very low because I have a system that delivered what should have been 20 hours. But the point is, if for any reason I'm able to do all of these things and I'm still losing trades, I will be able to assess my performance and know that this is my actual performance. This is what I am supposed to be doing in these markets. This is where I currently am as a trader. This is what I am capable of reproducing in these markets. This is what my system is capable of delivering, and I can trust it. So that any modifications, any tweaks I'm making are only to the actual system itself, maybe to increase profitability, maybe to hold trades a little longer, maybe to look for more entry confirmations, whatever it is. But not that I am taking trades I'm not supposed to be taking, I'm rushing into trades, I'm second guessing trade setups, none of those things. So it's a very beautiful exercise that I undertook. And I'm very happy I did it. It's one of the most valuable things a trader can do. And so I would recommend anyone who watches this video, please record your trades, go over your data. You will be shocked what you will find. It will give you a new appreciation for all the hard work you have put into mastering, learning, and honing your craft, and will give you an outlook on what is potentially possible going forward because you are able to see what could have been, you're able to see the mistakes that you make. This thing is preached all the time and it's boring, it's not exciting, it's difficult to do, but it's truly the only way to advance.